All right, so today getting into a few stocks that we might be watching for the year. You guys know what my crypto portfolio looks like. We did a video on that last week. Make sure and check it out. Today we'll take a look at some of the stocks, both from a tech standpoint, but also related. And what I say by related, meaning some actually related to some of the blockchain technologies that we talk about a lot here on the show. So we're going to dive in deep to all that good stuff. My name is Paul Barrow. Welcome back into Tech Path. This is going to be a good one today. I do want to thank our sponsor, and that is Trezor. If you guys are looking at self-custody and doing any kind of crypto holdings, one of the things that we recommend and I recommend all the time is self-custody. Now, and a lot of people I think that it's hard to do, but when you're utilizing tool sets like Trezor's, they really make it easy. There's a couple of options available. You can get the Trezor Model 1, very simple and inexpensive, and then also the Model T, which is the one I have. I like it. It's got a nice big screen, and it's a great tool for holding your crypto and other assets. So make sure and check them out. Use our link below. It does help the channel out. We're going to get into stocks today, and when we do a stock deep dive, what we try to do, one thing is that you guys will notice is there's some comparisons here on some of these stocks because of their relationship to what's happening in parts of blockchain, metaverse, NFTs, all those kind of things. There's strings out there into those markets, and it's why I like to really talk about these. But when we do this, I like to bring in some of the experts that come on our channel often. And one of those is a gentleman by the name of Andrew Horowitz with Horowitz and Company. Always a great person to have on the show. Great to have you today.
Hey, Paul, Happy New Year.
Yeah, it's going to be a good new year, I think. Yeah. I hope.
Yeah. Yeah.
Everybody I've been talking to this week.
Can we start off with I got a bone to pick with you first.
Let's bring it. Let's just do it right up front.
I got this write up in the whole thing about today's show, and the topic is
oh my god,
boomer tech. Boomer
okay.
Tech and crypto stocks to
watch.
I
didn't put that there. I didn't. I didn't do that. I did not do that. So you're going to give me a hard time about this all day, I can tell. Anyway, we're going to talk about some boomer tech, and that is Tesla. When we get into Tesla's situation, and obviously what Elon's been doing with Twitter, many people, I've been a stockholder for quite some time, own and drive Teslas, like the cars. And recently, back in September, I exited my entire position, thank goodness. But the situation now that Tesla is facing, just a quick tweet, this is here from Invest Answers. You guys know James over there, does a good show, and he really follows Tesla. But the big thing that really kind of hit me, Andrew, was this missed delivery number, 405 versus the 420. Now, we don't see Tesla missed deliveries too often. Granted, there's been a lot of pressure there. Likelihood is we're going to continue to see missed deliveries as we start to see 23 unfold. How big of a deal is this for Tesla?
I mean, I think a lot of this really has to go back to, it's like any other company. We seem to want to focus on one thing at a time, right? When it used to be things like eyeballs, we made that metric up as something that was really important. With clearly with Tesla, it's about the deliverables and deliveries, and I think what is a real problem in this particular report was that the last 2 months before that, there was heavy discounting going on. If you buy and get delivery by the end of the year, and they couldn't even make it up with that. That is where I think the concern came in, on top of the fact of loss of faith in Elon himself, that he's distracted, that maybe if he wasn't with Twitter and he wasn't dealing with this stuff all day long with another company on top of his SpaceX, on top of the Boring Company, on top of all of this, right? That maybe he would have focused in on Tesla a lot more, and it would have been making the numbers. The problem you have with Tesla is really just the numbers. Now, whether or not it's discounted enough right now for the actual fundamentals, and on top of that, the very erratic behavior of Elon, it's erratic. Let's be honest. He's a genius. He's incredibly wealthy. He's company after company, incredible design, a futurist. Can't take anything away from him, right? The only thing is, I think he stepped in a little bit of mud over here on Twitter, and he's starting to get margin calls on that. Here's a couple of points though on Tesla. The fact is that their earnings growth, their EPS growth, is going to be flat over the next year or so. Revenue growth is going to be erratic. They don't have the the punch that they had before. There's a lot of competition. So the deliveries, I think, is just the icing on the cake in this whole saga that started some time ago.
Yeah. I was looking at the chart. If you look at back when we sold, which was right around here in September, and I didn't hit that top, but it was over 300 barely. And now we're here down almost 63% on the adjustment, for Tesla. One of the things around this, and I'm very involved in the Tesla ecosystem. I have a couple of them, and I wanted to sell one this year. And I thought, well, I'm going to trade up on one of the X or the S, and tried to go through that process right before the year end. I was surprised at the fact that they were discounting the more, the more luxury vehicle, the discounting. You actually could get the $7,500 discount with it, along with 10,000 miles on the supercharger. To me, that felt very desperate at the very end, and to see them hit this, to hit that number and it not, it would have been in the 300,000 by easily, would have been in the 300,000. To me, that would have been a psychological impact, I think, that really would have affected Tesla. My question to you is, with it trading at $113 right now here on the chart, and you see it, and we saw that dip where it just nipped right at $100. Do you think Tesla is a buy below $100, or do you feel like it might see a further discharge as we start to see numbers roll out this year?
So first of all, just as a point of reference, so we own a small position of Tesla in our portfolios for our clients, and very small position, actually. It's a 1.2% position of the portfolio. And the reason is because the consistency of earnings, consistency of revenue, their return on equity, a lot of favorable conditions. Is not just this whole Cathie Wood, oh my God, Tesla, and today's announcement that they're going to be making engines for planes and boats. Did you see that announcement?
Right.
That was an hour ago.
Got it right here.
There you go. I'm kind of curious what the boat engines are going to look like, but pretty interesting overall. Everything about the company, right? We're not taking anything away from the elegance of the car, the first one in, the one that does the work. There's nothing you could take away from this company except for the erratic behavior of Elon, by the way. I'm going to continue to pound that. It was their strength and now it's their weakness. But I want to share a couple of things with you, and I think it's really important when it comes to the stock price. Tesla is now trading at 16 times forward earnings. 16 times. You may say, well, not a big deal. It's a market multiple, right? Car companies, which you may or may not want to argue with me whether or not Tesla is, Ford, 6.4 times, GM, 5.6 times. Price to sales, Tesla's trading at about 5 times multiple to sales. That's enormous when you look at Ford at 0.31 and GM at 0.34, with the idea that the overall growth of Tesla is slowing. Now, a couple of things you got to throw in here. China's a big deal. China's a very big deal. Now, it's not only Tesla that's slowing down. We saw that NIO last week pretty much threw in the towel and said, well, we're not putting out the cars either. And, with this whole, ramp from the overnight from zero COVID to 100% COVID overnight, the policy of China, where it's kind of gone a little haywire, and people are not actively going and saying, you know what, I'm going to buy a car right now, and especially a high-end expensive one. I do think that there is the possibility, though, to the benefit of Tesla moving forward, even though they have the heaviest discounting, by the way, is that they do have, I believe, you could tell me if I'm wrong about this, isn't there a new credit that will be available?
Yeah, it's a tax credit,
again,
but
that ran out before.
Yeah, well, and the bigger issue is that most of their cars don't meet the minimum for it to be able to acquire that. They have to hit a certain price point to be able to acquire the tax credit. So that's an issue. Many people are thinking that maybe Tesla might actually do some discounting, which they've been doing continuous price increases over the last 18 months, so much so that I think it started to price a lot of consumers out of the market.
Well, my point is there's some in there. There's some in there where there wasn't. It's just a little bit of an edge, a slight edge. So that's good.
Could be, but not necessarily in place right now for Tesla.
Correct. So, there are some things, again, I think that I just can't even, I don't even want to go into the whole nonsense of Twitter because it's nonsense. It's just, it's back and forth. And I also think there's something else that happened here. When one of the first recollections I have of saying, what is this guy doing? Is he a liar? Is he, what's happening? Is he stretching the truth? Was when he did the 420 secured thing back when he was trying to get the private going private. And then it wasn't really true and all. And then, but now all of a sudden there's a lot of weird non-truths going on and things that are said that are not happening, that are happening, that we're doing this, we're not doing this, and, I think there's a bit of a loss of faith. So you have to take some of the premium out of Tesla for the Elon premium. Okay. Yeah. So now when you circle back and you say, okay, well, growth of earnings, not really going to move very much. Earnings per share are going to be kind of flat, even on a reasonably, I would say, even if there's not a recession, there's going to be a stabilization, not a real massive growth of overall earnings. Revenues are going to flatten out as well. And then you throw in that, obviously, Elon is a little bit nervous because he said, hey, you got to stop raising rates because we're going to go into a hardcore recession. He's obviously seeing something on his side. So when you put this all in together, I think that Tesla right now is reasonably priced. That doesn't mean it can't be another 20% lower, by the way. And look at a longer term. Can you bring your chart back up, please? If that chart of Tesla. And can you maybe switch that to a weekly mode or something?
Yep, there's a weekly right there.
Yeah. So yeah, you got to scrunch it. That was my point. You see the scrunch you had to do there? So go back to just right before all the stock splits and stuff. I mean, you're talking about a $60 stock going left.
Yep.
So it's not necessarily, the cheapest. We're taking out that whole massive premium of free money. I want to buy me a, Lambo or a Tesla.
Yeah, and I think you're right. His distraction situation is one that I'm continuing to watch. My concern still, though, is the macro that the markets are continuing to push in. Obviously, the used car market is started to fall out, so that means less Tesla cars being sold, meaning not new cars being purchased, which will cause that problem. I still would argue that Tesla is not necessarily a car company. However, I'll also argue that right now they're a car company because this is their main source of income. So they have to act and deal with the market as a car company until they're ready to come out with their robots and their flying drones and all the other things that they have planned. Right. And make it a true revenue. I mean, Robotaxi was just a pipe dream. It did not happen, even though it was talked about constantly.
Yeah, was that supposed to happen by now?
Well, it was full self-driving, and that has been the knock on Elon, is that there's been a lot of talk, not a lot of delivery outside of the Model Y. The Model Y has been the shining star in the Tesla lineup, and pretty much put them over the top because it did start to bridge that gap, for the SUV. So, I mean, kudos to them for getting it done at least. That's the good part.
Yeah, the other thing you have with Tesla benefit is that the other car companies are such idiots.
Yeah, they're just so slow.
Can't get it done.
Yeah.
It's almost like you got to think they don't want to really get it done. But that,
I have a whole theory on that. I have a whole theory on that.
Do you?
I think that there is a little bit of sluggishness in Detroit for not necessarily moving this into the pipeline just yet. And there's other reasons I won't talk about on the show, but I just feel like there's a lot of political agendas here that kind of go into this. Let's jump over to Meta. And Meta, I'm a big fan of the company. I talk about it often, mainly because I feel like they're at least doing something in the tech innovation side. They've done some acquisitions. They've got this Luxel group that they just purchased to develop AR glass.
That was announced today, I think, right? Was that today or yesterday? Yeah.
Yeah, just here recently. And this always is a concern because my knock on Meta is the Meta Quest, which is their device that they're hanging their hat on, is just too expensive. It can't make it into mainstream until we see that price.
How much is that now?
It's like $1,800 for.
Right, I have the Oculus Quest.
Yep. So
I bought two of them.
Yep.
One of them is in. I brought them to the office to check them out. We opened up one, figured out how to load all the stuff there. Some of the golf stuff is fun.
Yep.
A few of the other games fun, but let me tell you, we played with it, some ping pong and stuff for a month.
A little bit. Done.
Now it's sitting on the side and the other box has never been opened.
Yeah. Well, that's technology in general, unless it really serves a purpose. That's what the argument I always have. Do you think Meta can, because it's been performing fairly decent. Let's take a look at the Meta chart right here.
It got an upgrade today.
Yeah, it did.
As the best.
Did
I
go
think
up.
Stifle or one of these guys came out with the best idea today, but it's definitely heavily discounted. Still, you could talk about all the different things you want to talk about the future with them, right? But first of all, there's a big concern. Well, not a concern. I would say a big question mark. It's not a concern. It's a question mark. Are how are they going to the whole entire metaverse thing that they're building, right? The new technology that they're building, the things they're looking at and Zuckerberg's looking at, how are they going to monetize that? I think it's a big question. And is it going to be advertising? Is it going to be subscription? What are we dealing with here, right? But in the end, right now they're an advertising company. And the problem is that you know this better than anybody, my friend.
Mm-hmm.
You know, what happened at the end of last year, a year back. What happened at the end of 2021 to 2022? Advertisers were like, no, we can't do it, right?
Yeah, I think advertising will be a very small portion of it. I think their model going forward is going to get into NFTs, digital collectibles, which will start to play into some of these games. That may be eventually become a marketplace. I think brand placement will be the other thing that'll be a little bit different. And there will be a lot of brands, I think, that will start to move in that direction around how, if you just look at what Nike has done and their big success with Artifact and digital sales, I mean, doing dramatic.
So let me ask you this. If that's the case, let's go there. If that's the case, why is Roblox, which pretty much has this right now, right? So whether or not they have the level.
Yeah, it doesn't have the users. They don't have the user numbers. Yeah.
If it's there, why don't they have the users? And why are they not making the money they should be making? I just wonder. So hold that thought. And then let's step over and say, well, Facebook, Meta has got the users. We assume they'll have the users, right? Mm-hmm. Once the build out is done, I don't know, what's the price tag? Is it 10 billion, 15 billion, $20 billion? I don't even understand how you spend that much money. You can't even spend that on resurfacing all the roads in Florida, right? You know what I'm saying? How are you spending all that money? And you got to wonder, how long is the profitability outlook going to be for that? That's my only concern.
I don't like that. Yeah, I don't like that aspect of what Meta has done. Obviously, they've adjusted their business model. They're starting to, they did a big layoff. Obviously, we'll continue to see, I think, a recalibration of the business units that are going to come out of Meta. I'm not really championing for them. I like it. I'm intrigued with what they're trying to do because it's always good to see a company try to make that leap, into the next zone. But if you were picking Meta long term, say 5 year out, would you pick that stock as a winner?
I've never liked the stock. You could ask any of my colleagues, they always ask, when's the time to buy Meta? I'm like, I don't know. I don't buy it. I don't like it. My clients that come in with it, I'm like, I don't like the stock. I don't like what's going to happen. I'm from the day, don't forget, boomer. I'm a boomer, it seems. I'm from the day. I'm from the day back when there was a MySpace, by the way, which was like all the rage, and then it disappeared. And you have to wonder, with all the things that are going on with body shaming, with all the strange psychological toll that a lot of this social media, the FOMO and things that happen with regard to the social media,
it's real.
It's a real problem.
Yeah.
And you may say, well, it's only on the TikToks and the Instagrams. It's not so much Facebook. It's all over the place, right? everybody feels they need to put the best picture up of the best thing of the, and whatever anybody else is doing is true. They don't realize they're putting up only the best thing and only the curated information.
So in Andrew's world, Meta,
I'm not a big fan.
Not a buy. All right, let's move on to Apple. Apple slides, they topple out of the $2 trillion club. I didn't know there was a club at $2 trillion.
That's a nice headline. It means nothing.
Where do you think Apple's gonna fly from here? I'm an Apple user. I'm not a big fan of the company, though, in the sense of their strategy going forward.
So you're not an Apple user, or you are an Apple user?
I am an Apple user, yes.
Yeah, I see that on your screen right now. You got Apple on the screen right now.
Right there.
So I'm like, what do you mean? What's he talking about?
There's Apple everywhere. It's everywhere.
A fan of what part of the company strategy? You're talking about the hardware? You're talking about the
here's my theory around Apple is that eventually the App Store has to become the jewel of the Nile, because I don't think they have enough of a technological lead to really dominate in the device business, including tablets and phones. So that's not necessarily a growth area. The growth area I think they have for the future is going to be in some sort of AR, VR, and or meta play, We won't call it Meta because they don't like calling metaverse. We'll just call it the Web3, Internet 2.0, whatever we want to call it. The point is that gaming, the fact that we'll see a lot of brands starting to implement into that, and I still believe Apple has a plan for this. They just haven't revealed it just yet, and most likely we'll probably get a reveal. I think maybe this year. That'll be one of my big predictions. Is Apple's going to reveal their plan going
So the
forward.
technology, it seems that, you talk about a company that slow plays things, right? You talk about Detroit slow rolling things. I mean, Apple's, they have a long vision. And,
for sure.
You look at their watch and I never
great
wanted the
device.
watch. So when the
Great
watch came out, I'm like, let me get this straight. You got to take it off and charge it every night. Okay. It's kind of small.
People
I
love
can't
it.
really see it. I know, but I'm just saying for me. And I'm like, and you can't shower with it and stuff? I don't understand.
Oh, yeah, sure you can.
I said, no, the original watch.
Type-E4.
The original
Oh, well,
watch.
sure, yeah. Everything
I'm like,
changes
you know what?
here, Andrew.
Call me
it
when
gets
I can
more
go in the water.
advanced.
Right. I said, call me when you
You
go
can do
in the water.
that now with their advanced version of the watch. It's
That
$700
is some
watch.
device. That is
Yeah.
an incredible device. Do you know, you scuba dive? Do you scuba dive?
I do. Yes.
Okay. So you scuba dive, you go north and then you got to
Spearfishing.
turn around and come back south, right?
Oh, yes.
On the compass, right? But you never
There you
get
go.
to the right spot because you're going all over. The Apple Watch can go down, I think, 40 meters, by the way.
Yes.
And you could GPS, put a waypoint in
Bingo.
when you leave your boat, and it takes, just like your car, it will map you right back to your
it.
boat. That's reason enough for me to buy. And it's a big
That's the
screen, I can
new-
see it because I'm a boomer.
Yeah, their new
I can't see
version
things.
is definitely. Well, that gets back to the point, because I think, sure, devices, that is one device I do think they have an opportunity to really kind of blow it out, because it is a good consumer device. But we're starting to see a next generation of gamers, a next generation of pop culture, and a next generation of consumers. And I think that in itself is going to lean into whatever this new technology that we're dealing with, most likely be led in gaming, but fashion will be a big part of this. Look at what Nike and Artifact have been able to do. That'll be a big part of it. Apple should be in this game. And that to me is the concerning part, is that they haven't revealed that strategy just yet. And the other argument I have is obviously with the EU putting a lot of pressure now on the App Store because of the issue of them pretty much having a closed garden.
Yeah, monopoly.
That's the other. That's the other issue, and that was kind of forced by Epic, with what they did.
I think that you're going to have to see a slowdown. First of all, when you look at things like financing, a lot of the tablets, the watches, the watch $1,000, right? So or be a little bit less, but
700 for the high end. Yep.
Yeah, all your various phones, tablets are. A lot of people finance that stuff, right? They paid off over a period of however long.
True.
And it's at zero interest rate. It had been zero interest rate. So now with interest rates a bit higher, the cost of items a bit higher, you have to wonder, is that going to put a crimp in those products, right? Because you know what? For the average person, something for $1,000 is not cheap. Pay it off at $30 a month or $25 a month. It's not that bad over a period of a couple of years.
I want to see their their Q4 numbers on device sales once they start to drop that. Do you know if they're dropping that here in January?
They're going to probably have, who knows where they're going to have, because they may, you don't know what's going to happen right now with this whole China situation, right? We went from lockdowns, which were a real problem, to now not lockdowns, which are a real problem. This seems like no matter what we do, there's a problem there. And the production in the various areas, Foxconn, et cetera, in all the different cities that have been allowed to just let loose, people are just not going to work, and
productivity it'll be a challenge, which could cause
we saw that last night.
Problems around that. Yeah, exactly.
So I think you're going to have some problems with that. I like Apple long term. I think it's great at the price. I'd love it to come down a little bit more. 125 is a great price. I don't think it needs to get down to 100. I don't need to be picky and say, 117.50 is the line of the. But it'd be nice, pick up a small piece, maybe, whether it's here or there, build on it. If it comes down, I think long-term Apple and what they can do, it's basically what this is. Let me just say one last thing. It's Boeing versus Airbus, right?
Yeah.
It's Samsung in this business. It's Samsung versus Apple.
Right, for
Apple
sure.
versus Microsoft. Right. But it's everybody's always competing against. So it's, Boeing versus Bombardier. It's Boeing versus Airbus. But it's always, where are they going? They're not going anywhere. I mean, look at Boeing
No,
when they finally was able to
yeah, I
release.
think the device business is what it is. You know, there is an addressable market, you know, scenario that I think still plays into it. They've had a hard time breaking into some of the emerging markets. Samsung has started to, you know, do some things within that. I still think the next generation is Apple has to go after their strengths, which is going to be the affluent markets, the Western markets, and what that next thing is. And they haven't really,
Yep.
outside of the watch, I would say they haven't really identified that next thing. That's going to be one to watch. So here's my question to you, Andrew. Apple was trading at 113 back on Thanksgiving. So we had a nice potential dip right there, and it had been on the floor for a little bit. Here now trading at 126. You don't think that we could see a little pressure on Apple in this first quarter?
Yeah, no, I am saying yeah, I said that. I said I don't know if we're going to see that 117 level, whatever it is. I think that you have an opportunity to probably pick it up lower. But again, what are we talking about? Yeah. I think it should probably come down.
Not much.
The bottom line is
if
there's economic difficulty in the next 6-12 months, which there will be, Apple, like everything else, should come down. It took a long time to Apple to finally break down, didn't it? It was like
it did, yeah. It was one of the few that was very resilient at holding.
That's just holding up. It's holding up.
Yeah, it was. I'm going to jump over to Disney. They just dropped a big, press release. This is their global product collaborations. They're doing the 100 Years of Disney thing. But the thing that I wanted to point out to you was these partnerships. They've got Coach, Adidas, Pandora, Mattel, Hasbro, Funko, Givenchy, etc. I mean, Disney has really put together what appears to be a direction that could take them into the metaverse again further. Now, Disney, if anyone could create some sort of digital environment, it's probably them. Plus, you've got Iger, who was recently with Disney, just joined back, and he was kind of the meta guy. His last action as a CEO when he left was to get certain metaverse patents in place. They did a big incubator with Chapek. So there's a lot of things happening with Disney. Where do you place Disney right now on your buy list?
So Disney, again, on the long term, for whatever reason, I don't know what the magic is, but it's magic. Let's just that it is. It is a magical thing. My daughter is a Disney. What do they call somebody who's like a Disney absolutist? You know what I mean? Just everything Disney movie, Disney TV. We're going to Disney. I'm like, how many times are you going to Disney? I mean, didn't you see everything?
We have one
how
of
many
those
times
here
you want to
in
go
our
see
studio.
it? How many times are you going to go see It's a Small World? I don't understand,
Yeah.
But what's interesting is I think they made a really big error, again, with credibility. Big credibility issue. When they came out with their streaming and they started throwing out all those numbers. Remember all the numbers? They're throwing out, 5 million, 10 million, 20 million signups. I'm thinking, wait a minute. How many of these are actually paying? How many of these are not just trials? How many of these are not just going in for 2 months during a period of time to say, you know what? I watched the Netflix, I watched the Hulu, I watched the Paramount, or whatever it was at the time. I'm just going to go watch some Disney movies here for the next couple of months. Cost me $25. What do I care? And I think that they had a credibility. Now, that was under Chapek, right? Really, that whole situation. That's maybe a reason why they kind of gave him
the streaming rollout under Chapek. Yeah,
right.
Well, many other things, but yes.
Right. But I think that was a really big credibility issue, and you add that to all the problems they had, the issues that really drove down profitability due to the ESPN side of things with regard to during 2020 and of course the entirety of that lockdown when you didn't have sports. That was a big issue. Now it's starting to come back. It is back, right? We have sports back, everything's back. So that's starting to roll again. I think Disney's great. I think that, yes, they probably will be continuing their partnerships because I'm sure that any company that either gets approached by Disney says, hey, we'd like to do a partnership. They're like, okay, good. That's fine. Let's do that. There's no reason not to.
Yeah, and if you look at their low, this was all the way back in March of 20, which is the last time we really saw these levels around, $80 to $90, trading now at $91. This might be the buy of if you're looking at long-term placement here.
I like it. I like it. The trend. I'd like the trend to turn, and that right side of your chart to flatten out a little bit, where we can't really get below it. Right. So you never want to grab it just when it gets to that point because they'll test you. right? So you want that flattening out. Now you could make a case if you bring your horizontal line up a little bit. You can make you can make a case you got a double or triple bottom there, and that's pretty much where we're going. But again, here's the thing: this is all predicated on what we talked about to start with. Is if we are going to enter into a time when there is a economic slowdown and people are really hurting, less and less people are willing to spend. It
is a question.
You have kids.
It is a question. Yep.
Have you been to Disney lately?
Well, we're going to go.
It's expensive.
But we haven't
expensive.
been, and you're right. It's strikingly expensive now.
Strikingly expensive.
My guess, this is a strategy. We talked about this in the pit here, our crypto pit, about maybe Disney has just looked at reducing the volume by raising the price so much so that they still create the numbers, but they're basically trafficking less, from into their parks. Hence, less labor, a lot of wear and tear, some of the operational costs, those kind of things could play into it. Some people have looked at that as a strategy. Again, I think more of the potential for future for Disney is still digital. What that might look like,
and that has
I
been
don't know yet.
but that's been a strategy that they have essentially been running, right? Maybe not total digitalization as you're talking about.
Streaming was their first step.
Not only I'm talking about the computer graphic. Basic what do you want to call them? Cartoons, animations, whatever you want to call it, or CGI.
Licensing.
I'm saying, in other words, right, to get them into that next genre of digitization of their entire book, if you will, that's, I think, an easier move than some others.
But you still like this one more long-term, definitely on your
I think
on
it's
your
great.
Okay, cool. Let's talk about Nike. Nike grew their digital sales this year 34% worldwide. This was
I'll tell you why.
In just the Q2. Okay.
They have good shoes. Good shoes. I'll tell you a story. So first of all, the shoe business. Interesting. Like I like Crocs. We own Crocs as a stock, for example. I was short Foot Locker for a while recently. That was a nice little couple of points we made on it. Then Nike came out with their numbers and moved things up. Obviously, it was a surprise. It was more so of a surprise because there's such concern about where things could be going and the negativity in there. But Nike has they've always had an incredible lineup of shoes. Their Metcon 7s are just unbelievable if you haven't worn them. And I think that the what they have going for them is they know the supply chain, they know the process, they know who's buying, they have the numbers. They just like many companies, but more so Nike, they know the deal. And people bought a lot. Again, a lot of what happened was a hangover effect from the pull forward effect of everybody having money, and then everybody saying, I don't need 18 pairs of sneakers right now. I like them, but I don't need another one right now until they wear out. The good news is they wear out. They wear out eventually.
Well, they do. I like Nike for other reasons. The footwear, great. I like their strategy from a digital standpoint. I think what they're doing with Artifact, and that we've talked about it multiple times. And I still think they are a hidden gem for some sort of digital fashion design that I think is coming. That'll be an interesting play, I think, that will show up in 2023. So this is one we're definitely watching. I was looking at the chart quickly here on Nike, and obviously it's kind of on a flyer here recently, just over the last few days or few months. What is that? What's that growth back from October? Looks like October to where we are. Wow.
Yeah.
Ooh. 48%, nice.
Yeah, they were. Well, you look before that, they were really getting killed. That one bar on the right side was their earnings there. You see that earnings that came out right there? Here. That was a big earnings number right there. And again, there's a lot of disappointment going into the big issue was the cost factors associated with what they were doing. Their margins were being compressed significantly. Their backlog, they still have a big backlog. So the backlog is better. The inventory levels are enormous inventory levels, but they're it's starting to come off a little bit. And again, you still have a lot of problems in a lot of places around the world. And but again, Nike has a full range of shoes, right? They don't only have the $100 plus shoes; they have $50 shoes.
Sure,
yeah. And not only shoes, it's not only shoes; it's other things as well. It's not just shoes. I'm talking about product. So you have that, and yes, they have done deals already. They did a deal with Roblox, as a matter of fact.
Do you think they are a recession-proof product?
Are they recession-proof? They're insulated, so to speak. They're cushioned like their shoes. They people need shoes. Now, again, I remember I've been, again, I'm a boomer, so I've been through some of this, it seems. And by the way, I'm not a boomer, just to be clear. Okay.
I know that. I know that.
No, but I've been through some recessions in my day. And I will tell you that, you know what? I don't care who you are. You just look around, you're like, maybe I'm not buying that right now. But eventually you do. Eventually it wears out your sneaker. You get holes in your socks. You got to buy a new shirt. But that is the point of recession proof versus do I need to buy another microphone, right? You know what I'm saying?
Right.
Or
yeah,
it's a different situation.
Tougher.
Do I need to go out for that, that omakase Japanese dinner for $175 per person for a 60-minute eating orgy? Or can I actually go to Trader Joe's? Yeah, well, come on. There's three of them on this side of town. By the way, for those of you that don't know, we're a few miles apart.
Yeah.
He's on the west side of town. I'm on the east side of town.
It's easy. But we got to do that. We got to do some more exotic dining this year. I think we've got to really do some exotic dining. There's some interesting chefs coming in to Miami. Let's talk about, back to Nike. This is, I don't know, at its accelerated level right now, would this
I wouldn't buy it now.
buy?
I wouldn't buy it here. Nope, I wouldn't buy it here. I think this is a reaction of unwinding some shorts. I think this is an overreaction to better numbers that people were freaking out about. It was the supply chain opening up a bit, a lot of things going right, and that's good. And people looking at this as, yes, in a recession, it is better than some other things that are pure discretionary. Because again, this isn't a high-end purse, let's say, that maybe only certain people are going to buy or whatever. So for sure, I think
we're going to wrap up. I'm going to wrap up the next three quickly, so I don't want to run too long here. Give me your thought on if you were holding this 1 year or longer, if you'd buy it. Okay, so I'm going to look at Nvidia. Nvidia holding in a lot of new stuff happening with Nvidia. They got the automaker slot in for gaming, just kind of following Tesla's lead. I don't think there's a big market there for that, but it's a good headline.
1 year or longer, I'd hold that. So hold.
Yeah. Okay.
Buy, hold.
Yep. Buy and hold. All right. Let's go over to Coinbase. What are your thoughts on Coinbase? $100 million settlement with New York regulator. This gets a little pump on the stock. We like it in the sense of the industry because we talk a lot about crypto, but coin itself has been up and down. What are your thoughts?
My concern about Coinbase is this. Real quick. First of all, I have assets at Coinbase.
Okay.
My concern is I can't imagine if Coinbase did what an FTX did or some of these others with commingling assets.
No way.
We're not getting into that discussion, but I can't imagine that. Then again, some of the big guys didn't imagine that either with some of the others. But let's just think that it's a little bit higher regulation because of U.S. standards, et cetera. But the concern I have is
control over a publicly traded company too.
Yeah,
to a certain. At least they have to report something.
Right. There's very few. We'll call them crypto brokerages. That's what they are, right? You want to call them by any other name? It's crypto. It's a crypto brokerage. That's what they are, right?
Yep.
Coinbase. So the thing that concerns me, there's fewer in the game these days, right? Where some of these have gone out of business. And now you're going to bring up Robinhood eventually. So they're in that business as well.
Yes.
So is Interactive Brokers. They're in that business as well, but they do it through a third party. And there's a few others, right? There's Gemini, et cetera. Thing is, it seems to me that if we follow the logical progression of how they make money, I'm not talking about their market making, by the way. I'm talking about the commission-based business that they are, which is essentially just whatever the hell they want to charge. That may change over time like it did with stocks and put so many stockbrokers out of business that they're going to have to create a different kind of model when dealing with this because their commissions are steep.
Yes. Well, I still think that a lot of these exchanges they just front run these trades. It's
clearly
it's just front running the trade.
Yeah,
that's where they're making their money, and it is what it is. That's been done for eons, so it's not something new in the market. So, but the question will be: is Coinbase, could they become maybe one of the very few last bastions to buy crypto for U.S. citizens? Because Binance still kind of on the fence with Binance US, but not necessarily coming in and regulating themselves, not a publicly traded company. Many people would probably look at Binance as a riskier play right now.
Well, we have Fidelity that came out with news a couple of days ago that they're getting heavier into it. We got, again, IB into it. We talked about Goldman Sachs is building something. Even JP Morgan that hates it is building something.
Yep.
So I don't know if it's going to be the last. I don't think last bastion is the right terminology. I think it may be, the first. They're really the first in to what they did.
Yeah.
So they have the first in advantage. Ease. They just took away the professional trading platform, and you have to now go to a different platform. I was on that platform for my personal.
Coinbase Pro.
And yeah, that's gone. It's been merged into something else. But I think that if once these big boys get into it, that there's going to be a squeeze on the commission.
Okay.
So Coinbase does not. I'm not. No.
So that would be a do not hold. All right.
That's a thumbs down, right? We got a thumbs down.
Thumbs down. That's right. Let's talk about Robinhood quickly. Everybody wants the Robinhood shares that belong to Sam Bankman-Fried, the former FTX embezzler and bamboozler. 450 million, almost $500 million in stock that they have, and it's held up in the bankruptcy court. So eventually we'll get a play on that. Why does everybody want Robinhood? What's the play on this?
I guess the play is the user base, the retail, much more novice, much more. I would think that a company like a DraftKings or something, that's a really good lineup. These seems to be the gamblers, the bettors, the non-investors, but more of the day traders, the people that are easily fooled. I'm sorry if I'm hurting anybody's feelings. That look at confetti and get I made my 100th trade. It's like a Peloton. I did my 500th ride. That's the kind of people that can get riled up and pretty much put anything under their nose that smells good, and they're going to buy it.
Yeah.
So I think I think their demographic and the user base that they have is a very easily sculpted into
influenced. Well, I think the argument there, though, is that there is a bit of a shift in dynamic around the investors that are taking up a lot of the lion's share. Now, not where the big money moves, obviously the kind of investors that you work with, Andrew, but when you look at Gen X, boomer investors, and even to a certain extent, older millennials that are starting to invest differently. They're going in with brokerages, they're going in with money managers like yourself. They're starting to be more strategic because they've got a bigger pie now. But for these emerging investors that are, the Alpha Gens, the Zs, the young millennials that are really started moving in the space, a lot of it is early mistakes. They're kind of learning the ropes. But man, there's just so many of them. So I just look at the volume of what that could look like in just a few years.
It could be. I just don't know if it's going to be Robinhood. I think they lost a lot of trust of a lot of people.
Interesting. So you think if you were to pick an exchange that would take that market, that younger market, and be able to influence it to jump to Robinhood or to that exchange versus what Robinhood is doing right now, is there anybody out there you would say, hey, this might be a place?
I mean, you still have the Schwabs out there that are bringing in money from all sorts of people through their robo advisory side of things. You have IB that is inexpensive and easy and a lot of training and a lot of tools. TD Ameritrade, which was a big, which is being merged with Schwab, by the way. Yep. Big. They're merging with Schwab. They merged with Schwab. This still is operating separately for the next year.
Sure.
But they're big on education. And you look at just some of those other areas. I mean, I don't know if you necessarily have to get your education through the process of losing money by doing so. Could you not maybe pay for somebody for the process or just watch until such time? I don't think you need to go through the process. It just doesn't have to be a losing proposition.
Yeah. Okay, so Hood would be a no.
Nope.
This is the way we'll wrap it up. We'll wrap it up on that one. Let's go over to our poll. I want to see what we have there. All right, here we go. Best boomer crypto stock investment in 2023, exchanges, Coin and Hood at 17, but Bitcoin, ETH, Trust, everybody's kind of looking at those discounts with Grayscale as being the place to go, other than tech giants coming in still. Maybe Meta, Apple, which were two winners, but Tesla not. Interesting on this. So, wow. Would you agree with that list, or who would you pick out of that?
I mean, we kind of said that, didn't we? We just said yes to the Tesla and Meta and Apple to a degree, right? For a 1 year out. We didn't talk about the Bitcoins. The other thing we talked about, I said, what was
Disney, Nike,
Coin. What was the one next to Hood? What's next to Hood?
Nvidia.
Coinbase. Oh, Coinbase, yeah. I mean, there's plenty of other names out there too, right? I mean, I think that some of the energy, some of the healthcare, some of the biotechs, there's some areas of there that you could play. And I think that, look at some of the alternate recession proofs, the staples are still a good play that you have to, everybody needs, you need soap, you need razors.
Yeah, right. Yeah. We got to do an episode like that. Is the kind of the staples of investing, because
Yeah.
when you look at
Tin
diversifying a
foil,
portfolio,
saran wrap. You need things like
all
this.
those things, all those
Yeah.
things. All right.
You need Tupperware because somehow that doesn't matter what you do and how you place them under lock and key. You open up that door and there's not enough tops to match the bottoms of the Tupperware ever. Just doesn't seem to happen. They disappear.
Yeah. One quick note here from one of the users is today's Fed minutes a clue that the Fed pivot is not coming this year. I don't know that a lot of people thought we were going to see a pivot this year. What was your thinking on whether or not we'd see a pivot this year?
Is it, this whole idea, whether it's a pivot or a swivel or a sneeze or whatever it is, it's insane. The CNBC, I can't watch CNBC anymore. I just can't. I used to watch in the background, in the mornings. Whatever. I can't. All they talk about is the Fed going to do this? I mean, every
Right.
single discussion, it's like, I don't understand. Are they trying to maneuver the Fed themselves? The Fed needs to bring down prices. The Fed is going to do that through
Price
knocking
stability.
the employment and the jobs market. It has to happen. Right
Yep.
now, we saw a JOLTS number out today that was actually looking
Mhm.
pretty good. We've seen a better construction spending. The ISM that came out today, 48.5, pretty much in recession or in contractionary mode. Under 50 is considered a contraction. Over 50
Yep.
is expansion. It's 2 months in a row on the ISM manufacturing. That's like that. You will see a drop off in manufacturing jobs. We saw some more layoffs. Microsoft talk about layoffs and a few other companies talking about layoffs. And you're probably going to have a tough tech season in earnings coming up. Fact is that everybody's praying and hoping, but I don't know what it is with this pivot thing. It will happen when it happens. And by the way, when the Fed stops raising rates, that doesn't mean that rates are necessarily going back down. They're going to stay at that level. When prices of inflation stop moving higher, guess what? They're still 20% higher than they were 2 years ago. They're not going down. The Fed doesn't want deflation. So your price is paid as an individual, whether it's a staple, whether it's a discretionary item, whether it's this or that, whether it's going to be your heating bill, your insurance, is going to be a lot higher for longer. And if you don't make enough wages to meet the higher level, your savings are going to be lower. Your savings are going to be lower,
Right.
less going into the market and into discretionary items. So this is the process that they're trying to put into people's heads. But the problem is that for whatever reason, everybody's fighting this thing. Well, the Fed has only done this on average another 5 to
Yeah.
months in a row. And then we never had the amount of stimulus that we had put into the market with ultra low, almost zero interest rates out there. The amount of money that was pushed in due to COVID and the combination of that, it was like putting gasoline on, putting kerosene on, and then adding some rocket fuel on, and then igniting it all. That's what it was. And nobody's like, oh, we're not going to have inflation. It's like, okay.
Yeah, right. That's the Fed's beauty. That's how
Once
they,
the
how they do it.
inflation genie bottle is opened, and that's the problem with both deflation. Too much is a problem. Too much inflation is a problem. It gets away from you. Very difficult to put that genie back in that bottle, that toothpaste back in the tube once it's out. Very difficult.
Andrew, what's your theory on just how the market rolls through 23 and 24? We've had a lot of macro analysts on kind of pointing at 24 as being the one that would be possibly the correction year. What are your thoughts?
I mean, I think that we're going to have a slowdown into 2023. I think there's a chance, by the way, January will be good. Towards the end of January, we're going to see a pop as we enter into the next Fed decision. So I think we're going to see a lot of sloppiness here. This is just prediction, which is worth nothing, by the way. You're going to see a lot of sloppiness in the first part of January, and then you're going to see the potential for a January effect, where you see a lot of things being bought back after the 30-day wash sale is over, and then you have a nice move towards the end of January. Then things get again pretty rough when everybody's like, "Oh my God, they are serious. They're going to continue to raise rates for some time to come, whether 50 basis points or 25 basis points." Again, still on a rate hiking move here and abroad. Then we get into the entirety of the winter season and what's going to go on with the war, with COVID. Are we at peak COVID yet in China? Are variants happening? A lot of concern about what may be brewing and growing in China due to this mass infection rate that we know, millions and millions, tens of hundreds of millions of people a day. So I think we're in for a continuation, a reality check the first half of the year at least. And then there'll be a reality check on the other side that, wait. We can still live through this. The good stocks will still hold up. You got to find those names that will do well. You got to find those companies that have the ability to have pricing, the ability to keep pricing up, but at the same time, sensitivity to the reality that people just can't spend an infinite raise of
into
cost.
Infinity. Yeah, for sure.
So, and you look at businesses, they're going to have to lay off. They're going to have to. Because right now, you look at a small business that had to raise their price. I know guys raising his prices is this week, 5% raise for everybody across the board for all of his employees. I said, well, what are you going to do? He says, we've got to raise price a little bit, but his margins are squeezed. And as that happens and as prices go up, people are going to start buying less. When they buy less, he's going to need less people manufacturing. He's going to have to let people go. Yeah. You're going to start seeing this. It's just the way a recession rolls.
It's the thing we've talked about it, is that eventually we're going to see. No. No. I like it. Anyway, the point I'm getting at is that, yes, I think the whole scenario, we've talked about this for months, is that there is a big issue with jobs. Credit, I still think, is going to be a big factor. You guys watch out. First 6 months going to be pain. So just get ready.
Yep. There's a lot of credit being used right now. Credit's been extremely high.
Yep.
But anyway, yeah, I think you're right.
Yeah. Andrew, always good chatting with you. Thanks so much for stopping in on the show today. We appreciate it.
I appreciate it, Paul. You're the best. Appreciate it. Thanks.
All right. Take care. All right. You guys are, if you're not in on our Diamond Circle, make sure and jump in. It's really easy. Just click the link below. You can join our email list, essentially, but it also drops in additional content, and we give you kind of a flow of what everything is going on here on the network. So make sure and get in on that. If you guys want to reach me, it is out there on Twitter @PaulBarrett. We'll catch you next time right here on TechPath.